For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. Two outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 Malaysians live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this group of people.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I'm Possible, where we managed to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients if they are family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. To join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia, managed by our company LifeChain. Today, our webinar title is Passive and Active Reaction to News. Welcome to this webinar. My name is Shen Chu. I'm the moderator for this session. Now, as you know, the stock market is often influenced by the market moving news, and the prices will change, and different type of news will bring different degree of impacts to different companies. So today we are going to look into what are some of these market moving news and how should traders and investors position ourselves to react to this type of news. All right. So before we begin, as usual, disclaimer, whatever we share in this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Allow me to introduce our speaker today. It is our new guest on our Bursa Malaysia webinar programs. So he is none other than Max. So Max first indulged himself in the SME financing industry after finishing his diploma in finance and investment in TAR University College. And he is also part of the team of the Rakuten Trade and TA Securities. He's also a former risk and compliance officer and dealer rep with TA Securities. And to date, Mark has just passed the 7 years mark in the capital market as an investor himself, where he also had the opportunity to run the financial blog Want to Invest with over 60,000 investors since 2019. Wow. Matt has also hosted close to 50 interviews with publicly listed companies in Bursa Malaysia, as well as NASDAQ, and had been featured on Xinqiu, Nanyang, China Press, City Plus FM, and Caijing. And currently, Max is also a SGX Academy speaker. So welcome to this webinar, Max. Good to have you here.
Hi, Shane, and good evening to everyone. Thank you for having me here. Truly thank you to Bursa Malaysia as well as LifeChamp. And I hope that the session today will be helpful to everyone here.
Yep, can't wait to learn from you, Max. So over to you.
Thank you. Let me share my screen real quick. Okay, by the way, just a quick interaction with everyone here. If you could hear my voice loud and clear, could you type in 1 over to the chat box? Okay, cool. Thank you, everyone. So as Shane has introduced, my name is Max, and if you have any questions throughout the session, feel free to comment over at the chat box or over in the Q&A session, and we will try to address any questions that you have along the way, right? So I hope you guys are doing well throughout this, the least we can call this is a turbulent market environment, right? So now the topic that we will focus on today will be how would one digest news and also noises in the market. As you know, the stock market is always full of noises, full of news, and also all this kind of information. How would one digest and convert them into making your own trading and investment decisions? Okay, but again, a quick disclaimer: there is no any kind of recommendation in terms of buy, sell, hold of any securities. So if you do need advisory on this part, please do not hesitate to contact your licensed dealer rep, licensed financial planner, etc. Right? Okay. So before I break down the type of news in stock market, I would like to first share a couple of sites that investors that actually can go to and go and look for the news in case you are new to the stock market, to get a hold of the latest news and also for your trading and also for your investment purposes. Now, the first one is obviously would be the Bursa announcement website, where a lot of the companies, they would have announced their latest, they are required to announce that some of the things that to update investors, such as quarterly report and circular regards to corporate exercises, for example, right issue, maybe private placement, and also other corporate exercises. The change for other examples are like changes of director or major shareholders, shareholdings, and more. And some other websites that, in case you're new to the market, that I would really recommend you to go through is The Edge. Probably you know that already, The Star. And if you do not have the app yet, I think it's super useful for investors, which is Cash Screener. And there are also other other news streams such as Nanyang. And if you are an investor who would like to look at macro environment, you can look at investing.com. And if you have the extra budget, you can also go for Bloomberg News. I think it's a really good source of information, as Bloomberg Terminal is one of the widest used terminal for a lot of analysts and even fund managers. So the news that are derived there are naturally, they are up to a certain level of quality. Okay, so quickly breaking down, there are usually 5 types of news that we can categorize in the stock market. right? The first one being positive news, but it's in short term. The next one being positive news, but it would bring a longer term impact to your trading and your investments. And obviously, the other side of the coin would be negative news, which is the short term impact to your investment and trading. And next one would be negative news, and it will be over to the long term. And another one would be a neutral effect news, which net there will be no actual impact into your trading and or investments. Okay, so but I want to emphasize that there are two key elements that the news would play a role in terms of your trading and also your investment. The first one obviously being the news, which is the main topic today. But the second one is obvious, but I have to emphasize is the company that you would associate with the news. Now, take for example, if we are talking about let's say a change of US dollar against ringgit Malaysia, and we are using a local denominated company as comparison, there will be no impact to the company, hence neutral effect news. But if you're taking another export-based company and where US dollar is strengthening, then so obviously it will be a positive news to the company. But what about those more complex news in nature and also those that are not so clear in terms of the overall picture? How about those news? So we will discuss about them along the way. Okay. So I give another example that we can have a thought together and also we can discuss together. For example, if there is a increase in terms of oil price, which is quite drastic if you take it back to the COVID times, the news itself would be beneficial, obviously, for the oil industry companies, oil and gas companies. The upstream player, for example, Hibiscus, and also, the other would be Rich Energy. These companies, they would benefit directly from the increase in terms of share price, naturally. Increase in terms of the oil price at that period of time. But as for the lower stream, let's say the midstream and also downstream companies of the oil and gas industry, they will be benefited. You will notice that their share price might increase at the time of the oil price increase. But the reality is, midstream and also downstream oil companies, the effect might not, the oil price increase effect might not impact their profit and loss, not after, I think, at least 2 or 3 quarters. That is because, like, for example, if you take a oil rig builder, or maybe a charter, FPSO charter company, it would take some time for the upstream companies to go and look for them and also negotiate the terms and award a contract. So it would typically take 2 or 3 quarters to actually reflect in terms of their profit and loss. But the share price had already gone up. This is the most tricky part that a lot of investors have to take note of. When the share price had already gone up, so should you chase after the stock itself and stay with it, or you should trade it because it is a shorter term positive news impact? We'll discuss this in depth with more examples later on. Okay, so vice versa. Like the increase of oil price, it sounds like a good thing, but it may not so good for plastic manufacturers because their raw mat is typically naphtha. Polymer. So it's a byproduct from the along the value chain of breaking down the oil into the raw material of plastic. So when very simple rule, when the raw material prices increase, it might not be good for the company itself. So if you have this kind of companies, like you have a mix of companies in your portfolio, so and when the news come in, you might have to evaluate across all industries. Like oil itself, it doesn't just relate to oil, it also impact the plastic, and also some companies that their cost structure, it's heavily dependent on utilities. Utilities includes obviously the electricity. So when the oil price increase, there is a tendency for electricity cost to increase too. So if let's say for smelter and also extruder, those are involved in the heavy industry, they use a lot of electricity. So that might be a negative impact to the company over a shorter or longer term, depending on the overview and also the government subsidize. Are they giving subsidize? Are they not giving subsidize? This kind of thing. So you have to digest the news, and you have to segregate which industry will be benefited, which will not, and etc. Okay, so you can position them into this is a positive short term, long term, and this is a negative short term, long term. But okay, how can we define short or long term? Typically for me, just for benchmarking, longer term impact for me, it would affect the company for 1 year or more. But short term, it will be less than a year. But of course, this is a very flexible term. It depends on your trading strategy. It doesn't make sense for you if you're a trader here and you are picking up a long-term positive news as your trading strategy. It doesn't make sense because the result only come in after a year and you want the trading result immediately. So it make more sense for you to leverage on positive news that are short-term in nature. Okay, let's take another example that just recently happened. I would say it would a good example would be the Macroville news. The 17 billion worth of MOU signed with China by our government. Seemingly, it will have a very good impact into the general construction industry, and we will have to all agree that it will be a good news and or a positive news to the overall industry. But if you look it down deeper on a more micro level or more company level, there are no actual contract that have been mentioned or have been awarded yet. So we will talk about MOU more in the later part because it's always a trap for a lot of investors. So you have to really watch out for, this kind of MOU. But anyway, we'll talk about that later. So we are not able to define this kind of a news, general news, whether it's beneficial for the micro level or company level for a single company. So for this kind of company, for this kind of news, naturally the share price would increase. Okay, it will increase on the first day when the MOU announced. A lot of construction stocks, they actually move. Some other related companies with the names they mentioned, they have also increased in share price. But is it a positive news over the long term? The answer is no, because there's no concrete contract being announced yet. But at the same time, it is a positive news over the short term because it would move the share price because of the emotion. We'll talk about this later on. So it will be a net positive news over the short term that traders can leverage to trade over the short term for this kind of news. Okay, so why do I want to emphasize on the short term and long term is because the holding period. Now, take for example, if you were to chase after a stock that has a short term positive news, you'll notice that after the euphoria period, or we call the optimistic period, the share price tend to fall. But if you do not define the kind of news or the rationale that you buy into the company at the very early stage and you held on to the company, most likely than not, you will suffer paper losses and you'll be stuck with this company at a higher price where you can actually buy it lower after the euphoria or the optimistic so-called emotion or rationale die on. Okay, so these are some of the things that you have to consider whenever you saw news, and you have to really break it down: short-term, long-term, or is it positive or negative, right? So let's talk a bit about the primary function that moves the stock price. Obviously, it will be supply and demand, right? Straightforward. And supply and demand, what drives supply and demand? Ultimately, it will be emotion over the short term. It would be emotion, whether it be greed or fear or optimistic or pessimistic. So for shorter term kind of news, normally the share price itself, it would be driven towards the, the greed or optimistic emotions that drive up the share price, like I mentioned just now. So if you are not a professional trader like PDT, IBT, or you are a very experienced trader, I would normally not it would be riskier for you to just trade based on this kind of news. The reason being, first one, they might already have access to the news before you, so the share price has already factored in the the positive impact. So by the time you trade the stock, you're not trading at your what we call best position that you could get. Your risk is higher, your reward is potentially lower. So normally I would say that unless you're really familiar and your hands are really fast in terms of keying in the order, so trading with positive news in terms of short term is I would say it would be normally riskier. Okay, so without concrete, announcement into the micro level, or what we say on the company level, the case study I've given just now is that the euphoria die down and then the share price will go down and you'll be stuck with the company. So ultimately, it will not be a good investment decision for you. I personally, when I started investing, I have a lot of position, like 5 or 6 stocks that I have stuck with me in the portfolio. So after a couple of period, only then I have decided, to cut loss and move on from that. So, it's something that investors and also traders should really, really take note of. Okay, so another kind of a short-term items would be one-off dividend, special dividend. It's a really typical example in Malaysia. Okay, because as Malaysian, we all love dividend, right? Normally, when a company they issue special dividend, it will not be out of the blue. It will be due to them disposing some kind of assets, whether it's loss-making assets or maybe it will be some of the assets they think it's time to monetize. For example, like Kamada, you just showed, they just sold off their, the highway assets. Okay, so this is one of the strategies that they would monetize it and they would give special dividend to investors. Now, there are some I don't know about the audience over here, but I do have a chat with some of the investors or traders. They would trade based on special dividend. But to me, ultimately the share price, they will still adjust after the ex-date. So net it will be the same. You get the dividend afterwards, but your share price had already came down. Now, some of the companies that they dispose asset, there is a risk of them going into the, it's not PN17, it's PN16 or GN2 status, which means that the company is cash rich, but they do not have a core operating business that that categorize them as a listed company, because they are just cash rich. So they would have to look after a lot of, they have to spend time to look after assets to acquire into the company to make them getting released from PN16 or GN2 status afterwards. Now, during this period, you enjoy the special dividend, but you might not enjoy the capital gain, and you might even suffer capital losses after the ex-date. So if the action of the company issuing, you try to follow on the rationale over this. Okay, if a company they issue special dividend because of them disposing a core business of them, now that is a negative news over the long term for the company. It will not benefit you as an investor over the long term, because there is a higher risk of them not being to acquire the same quality of asset at a lower valuation that they sold their asset of. Yes, over the short term, you will enjoy a special dividend and maybe a short-term upwards trend of your share price, but you have to make it very clear that if you are taking advantage of the short-term positive news, you have to trade, or your investment period have to be shorter in a sense. And it will be a negative impact over the long term, which means that you have a risk of not able to find another good asset to acquire, as I just mentioned just now. Okay, so you really have to break it down and try to come from different angles to digest some of the news, some of the announcement that a company made. Okay, and I think for long-term positive news, you guys have already a rough idea what it should be. The news, essentially, it should be bringing value to the company over a longer term period. For example, some of the favorable companies that Malaysian love would be Electronic Manufacturing Services, EMS. For example, this kind of company, normally they receive a contract from a large customer. It would bring them long-term beneficial impact, because first thing is coming from the client itself. If they were to assign a contract to you, normally their product cycle would be longer, because it also take time for them to have a NPI, new product initiative, a lot of R&D involved. So naturally it would bring positive impact to the EMS company for maybe 2 or 3 years, 3 to 5 years, depends, before it actually slow down. So this kind of news, obviously it will be positive news to the company, but at the same time, you have to evaluate the risk behind this kind of news. Okay, so it's a bit tricky, but I think it's the risk and also study we have to take note. Now, it will be beneficial for the EMS company to take the contract firstly, for sure. But you have to figure out, will it increase the customer concentration risk for the company itself? If the answer is yes, then you might have to be careful with the overhyped valuation. Because what happened with one of the EMS company in Malaysia is because the over concentration, and once the loss of the major client, the share price, I think, gone by 80 to 90% in value. Imagine you are the shareholder that holds the share itself. So it will be a very drastic effect. So at the same time, a good news, you have to figure out some of the potential negative sides to it. And also, if you dive slightly deeper into this example, normally when a company they receive a new contract, they might be required to make capital expenditure or capital investment. So when they make capital investment, it means that they will increase their facilities and also their production numbers of units that they can produce, for example. Now, imagine if they are over expanding their company, there are several factors that would impact the company essentially. The first one being depreciation. Once the factory and machinery kicks in, there will be depreciation. If the company over expand and the contract couldn't cover the depreciation, this is where you should really watch out. Although it was a good news initially, but the facilities are being underutilized. That means that the company over expected the contracts that will come in. This is one thing that you will really need to take care of. And also the other thing being the fixed costs, fixed overhead, utilities, overhead and everything, things like that you would impact your bottom line. When these kind of things that they kick in, it will impact your EPS. So earnings per share, okay? In this case, earnings per share. When it impacts your earnings per share in your quarter result, naturally, it will also affect your share price, okay? So you have to really be careful with the kind of news that you receive and how do you interpret it. And also to make sure if it's a good long-term good news, long-term positive news, to make sure you always follow up whether does it materialize, because normally you buy in at a premium that factor in the future effect of the good news. So you will have to wait for a bit before it actually materialize. But if it doesn't materialize, it is the time for you to really consider to let go of your investment. Obviously, the news doesn't sound as good as it is, and we'll talk about a bit forward PE against the EPS later on. That's a bit complex, but I think it will be really helpful for your investment going on. Okay, now in terms of negative news, I think negative news for some reason it will be more straightforward in an sense, right? Because negative, it means that the company is doing bad. There is a accident happen. The general consumption environment is not that good. For example, consumer electronics are really suffering now. So all the semiconductor companies that have a large exposure to consumer electronics, they are suffering now. So that is a negative news that would last for, I would say, medium to long term, unless there's a switch in terms of consumer sentiment, which obviously we are not there yet. Before that, I would say that this semiconductors company, they might suffer over this more medium-term kind of thing. Okay, so I would like to talk about the negative earnings surprise, because next month it will be May, and obviously May is the busiest month that you will see. Most of the companies that have a financial year end on December, you see their Q1 being announced in the coming month. So seeing what the industry is experiencing now, there is a very good chance that a lot of these companies, they might not have a very good Q1 result. So essentially, you already predicted that actually the market already factored in, but you can predict that the company will do bad in terms of short term. So it is a negative news over the short term. So you can digest it that way. But you might leverage on that opportunity itself. For example, the negative news. For example, like really, really good fundamental companies that suffer over 1 to 2 quarters bad results. These are the opportunities that you might be able to leverage on it and go into the company and invest in it when the market actually says, oh, this company is doing bad, the valuation of the company previously are overstretched. Now it's time to pull back and also make the valuation more on the ground. There are a lot of semiconductors companies that I would see the potential that they kind of disappoints investors, but at the same time, they have the long-term growth potential overall. So do look out for this kind of short-term negative news for you to take advantage of. And also, another thing that I wanted to emphasize on the news topic, right, is the title that the media house in Malaysia have. Let me give you an example. When you see a news title like Company X went into red in Q2, so naturally your impression is, oh, Company X obviously is doing not good. But before you actually dive into the quarterly report, the studies of the company, obviously you wouldn't know what is the real cost of the company going into red. It could be a macro impact. Of course, it could be a fundamental impact, that loss of a major customer. There is a suffer in terms of demands. These are longer term negative impact to the company. But when we talk about shorter term, it could be one-off impairment. The company is doing some kitchen sinking exercises. There could be a disposal of loss-making business, and there could be USD against ringgit differences. So these are the factors that are what I would consider shorter term impact. So being contrary myself, I would normally leverage on this kind of opportunities. I'll look for companies that have a one-off effect or one quarter effect, negative news. Then I would try to take action on it, because I know that the company will recover in the subsequent quarter, because this is just a one-off basis. These are some of the things that you could do, but you have to really careful with the news title that you read on. You have to dive deep into the quarterly report itself. Okay, so a lot of these losses, right, sometimes they are on paper. That means that it doesn't impact the cash flow of the company. This is a bit beyond news that we are talking. It's a bit more towards the fundamental analysis of the company. But as long as it's on paper in nature, it doesn't harm the cash flow of the company, then I would consider it as a more short-term negative news. Okay, so for long-term negative news, right, I think you already have the ability to determine them by now. Like a loss of major customer, I think is the best example that I could get. Now in a single quarter, if you see that there's a significant drop in terms of revenue and also profit, and if you're not sure about the reason and you do not have the time to go through all the quarterly reports, you can actually study on the research report done by the analysts. I think generally all the reports, they are good in nature. Some of them are more in depth, and some of them it's more on a surface level, but ultimately they will give you an idea what is happening on the company. Then you can digest on it. But normally there will be a delay of 1 to 2 days before the analyst report come out after quarterly results. Then you might lose out the timing opportunity, because the share price had either already gone up or either already gone down during that period. So if you have the time to digest it yourself afterward, that'll be best. But if you do not have, you can take a longer stance in your investment period. Try to leverage on the information you get for your taking in as a positive or negative impact over the long term. Then do your study and make your investment decision based on that. Okay. Now I want to take a bit of time to talk about MOU specifically, because I noticed that a lot of company, especially during COVID-19 times, they had been sort of misuse the MOU thing to attract investors to go into the company. So I really want to emphasize on MOU. By all means, I'm not a lawyer. I do not have extensive knowledge on law itself, but MOU itself, it doesn't have a lot of legal binding liability in it. So maybe MOA it's better, but MOU is more like a friendly friendship between two parties instead. So for a company to announce MOU, unless it's a really reputable company, normally I myself, I will try not to take any action, because a lot of the time, if you have the time, you can go through Bursa announcement, and you can check on the lapse of MOU that happens on Bursa Malaysia. It is really common. So MOU itself, I will not take it as a positive or negative, or normally it's positive because otherwise they wouldn't announce as MOU, right? So I wouldn't really take it seriously for the MOU at that juncture of time until it converts into a MOA or converted into a contract. But in terms of contract, right, there are some companies that, you know, they are quite creative. I don't want to mention names here, obviously, but you'll notice that the contract value that they announce is normally up to X million. For example, supply of X commodity up to X million. That means that this contract that I sign, I have no obligation to supply anything, but the maximum capacity that I can supply is up to X million. If the share price had moved up already from there, but you don't know what is the actual delivery of the, you know, the said commodities, obviously there's a mismatch between the expectation of earnings to come in, you know, the future quarters, and also the price that have already moved. So be really careful when you go through this kind of a contract and also MOU. So yeah, these are the things that I really want to highlight to you know, the traders and investors here, especially for those who are newer to the stock market itself, right? So next up, we'll move to maybe a couple of live examples. The first one I think is the more interesting one. I don't know if you guys know this individual. He is quite famous in the stock market. The founder of, you know, this Country Hike has been declared bankrupt. Obviously, the news has been clear now. It has been declared bankrupt because of the, you know, 3 million outstanding debt. And naturally, if you are an investor and you do not know what is happening, when you see this kind of news, it will give you a negative impression to the company from a couple of angles. The first one being, if the founder of a listed company itself, it will suffer, you know, from bankruptcy. So what will happen to the company? That will cause panic. Secondly, if the founder itself is suffering from bankruptcy, would he or she required to, you know, dispose the shares in the open market in order to raise fund to settle on to the bankruptcy itself? So there will be panic impact. But of course, this case has been clarified by, you know, the individual here. So you really have to, you know, dive deeper into every news that you receive. Do not take it on a surface level. Never take it on a surface level. Very good example would be this case itself. Okay, so another one would be, I would say, is the commodity companies. They are, you know, usually the hot topics that would be discussed over the news because they are more easier to track in or compared to some niche manufacturing or maybe some technology companies, because you can obviously track the trading price of the commodities on the market itself. Now, take this news, for example, steel companies caught between a rock and a hard place. So it will tell you that the steel makers are, we are talking about the more upstream maker, cold rolled coil and also hot rolled steel makers. These companies, they might suffer margin compression in between, but you have to take it down another level to understand if the company that you are studying, although it's a steel company, but they might be in the downstream. That means that they take the material here, cold rolled steel or maybe hot rolled steel, they will convert it into other kind of you know, manufacturing material or maybe construction material to supply to their clients. They might benefit from this because the price that they enjoy has been lower. I mean, the raw material that they purchase has been lower, but at the same time, there is still demand over there. For example, if there's still a demand, then they could enjoy the price difference in between. Okay, so you really have to go through the value chain to understand whether this news would impact the company on what stage of the value chain. Take, for example, the oil and gas company, the value chain that we mentioned just now, and also steel companies, another kind of example, right? So this one is more straightforward. You know, this, again, it's more on a macro level. There is no micro or maybe a company level announcement made yet, but you can observe the Takaful players or insurance player in Malaysia, see whether that the initiative by the government would be beneficial for them over the long term. Then again, you can take action based on the you know, information that you have over there. Okay, Another interesting thing that a lot of traders or maybe investors they like is buy on rumor, sell on the news. It's very common. It happens in across, I would say, all market. Okay, but I hope that the participants here really think it forward. The rumor that you get, how can you make sure it is really good? First thing, how can you make sure it is going to materialize? If it's not going to materialize, it's best to believe that you will not be the only guy that received the news itself. The rumor itself. Okay, so if you were not the only person that received the rumor, so obviously the share price has already gone up. You will have a heightened risk already because again, back to the factor of share price moving, is optimism and also pessimism and greed and fear, obviously. So it depends on how good you can get the rumor itself. You see, the source of you getting the rumor is always important to me. If you want to trade or maybe you want to invest based on it. Now, I'm not trying to depreciate the efforts made by some parties to, some of your friends, some of your families trying to share with you the news or the rumor. Normally, they are at good intention. They want to share with you the opportunity to profit, but you have to think deeper, okay? When the news reach retail investors like us, normally first thing, the price had already gone up. Secondly, think of what is the purpose that the news the rumor get leaked out to the retail market, okay? You have to always remember this. Those who get a hold of the said rumor, okay, or the announcement to come, is always the party involved in the transaction or the deal itself. For example, the mega project. Company X may secure a mega project in the upcoming months. So those who are involved in the project itself, they already know about it. Of course, if they take action based on it, it will be insider trading. Obviously, that's an offense. But subsequently, people who know, you can see them again, the information chain. People who are involved in the transaction itself, and the people who are close to them, their friends, their family, their kins, and their associates, then the close friends or inner circle of their kins or maybe their associates, then ultimately to certain industrial people like your remiser, your broker, then it will pass to your ears or my ears. Okay, so you can imagine how many hands it passed on before it really reach us on the rumor itself. So if you want to act on rumor and you want to sell on the news, I would say it will be pretty difficult now, given how the share price has already normally gone up by the time you receive the news. Maybe you can take on, if you are fast enough, you can take off a couple ticks, like 3 to 4 ticks before the share price actually went down. Okay, so to me, in Malaysia itself, I would say, this strategy doesn't really benefit us as much because, obviously the flow of information has really gone really quick, and it may even cause a negative impact to your net investment and trading performance. So be really careful to whatever kind of a rumor that you receive. Always check the source, because by the time you receive, it may already become a news. So what they say on the picture is sell on the news. By the time you receive it, it is the time that people they're getting ready to sell. Okay, so if you want to really leverage on rumors, leverage on this kind of news, right? You may act on industry-based news. What do I mean by that? For example, if you go to a furniture store today, you notice that they are on mega sales. So normally, there is a lackluster in demand, so they would need to clear off their inventories for cash flow for mega sales. So obviously, furniture store, they are always in mega sales. So I don't know about that, but you have a chance to talk to the owner or the management staff of the company, and they tell you, oh, Max, the furniture industry is really not doing so well now. Now that you know that furniture industry is not doing so well because of lackluster of demand. Okay, actually that is happening now. It's not only on the furniture industry, across a lot of industry as well. But once you've gotten this kind of rumor, you can cross-check with other shops for one. Secondly, if you have friends that are working along the value chain, for example, that are supplying the chipboard, MDF, or the upstream timber supplier, you can ask them, had the demand of furniture slowed down that impacted your order? Are you still doing okay along the way? So if their answer is no, furniture is really slowed down. So you already know that the upcoming results of these furniture companies, they will not be good. if you already built a position in Malaysia, sorry, we couldn't short for long, unless you're, PDT, IVT, or maybe you're a fund manager. In that case, if your position, you have a certain, furniture portion in it, you may be able to act earlier because you already confirmed that the industry itself is not doing well. Okay, so these are the actions that I would take to leverage on the opportunity, so-called buy on rumor and then sell on the news. Okay, these are the things that I would do, right? So maybe kind of a trick question. So results that are coming out in May, are they good or bad in nature? Okay, so we already discussed the categorization of the news and also the application of how should you digest the news into defining whether this news is a good news or a bad news. But now let's discuss into, a little bit, touching a little bit onto the financial metrics, a bit of fundamental analysis. Sorry, I'm not a technical guy, but I hope that whatever I share on the fundamental side could help you as well. So good or bad results, how would they impact you as an investors or trader as a whole? So we discussed this a bit earlier. If you're a trader for short term, in a sense that you would naturally go for short-term positive or negative news because you could immediately take action on it. Like the company announced a very good result tonight. So tomorrow morning, there is a very good opportunity for you to trade along the way over for the next trading day. Okay. But if it's bad news, then you can, maybe dispose of that position as you like. Okay. But for investors that are for longer term, again, back to the term, long term and short term, that up to your personal decision. For me, I think it's 1 year and above that defines a long term positive news and long term negative news. You have to digest the news or the result. What is the net impact on it on the share price itself? Okay, for example, like we mentioned this again just now, if the company had a bad result this quarter, but you know that the subsequent quarter they will recover, then obviously this presents an opportunity for you to leverage on. But this kind of news that you can leverage it in what terms, right? It will be a short-term negative news, but longer-term positive news for you, not for the company, it's for you. Why? Because you can buy the company at a lower valuation. Effectively, your risks are lower, your potential return are higher. So it will translate into a good news over the longer term. Okay, so really trick question. It depends on how long the good or bad results will last and also the valuation that you go into the company, right? But we just mentioned that temporary slower results might present a good opportunity, trading opportunity for you. But in this case, is it true for this company? By all means, I have no position or I have no intention to buy or sell this company, but just taking it as a case study. If you take a look at the past 3 quarters financial performance of this company, right, you will notice that the financial performance, yes, it had been improving slightly over the past 3 quarters, but effectively, it still doesn't fit up to the previous financial performance, for example, like in 2021 and etc. So I've gone through a bit of studies into the company. The key reason for the slowdown in terms of financial performance of this company is mainly on the demand side. The demand for DPIH's product has gone down, but the raw material prices in turn had gone up. So this represents a slowdown in revenue. Obviously, your fixed costs per unit would increase, and also your margin would be squeezed when the raw material prices increase and your demand lackluster. Of course, they enjoy a really, really good year during the COVID times where they increased their ASP, average selling price. But unfortunately, that is not the case for now. So for this kind of companies, I would normally categorize as longer term negative impact. And unless you are able to, figure out the timing, so-called tipping point for the company to recover, otherwise I would think it would be quite risky to, go into, unless you know when is the tipping point of that company, right? So another interesting case study, I think it would be the love-hate relationship glove sector, in a sense. So glove industry is always a sensitive topic amongst Malaysian because due to the some people profit majorly from it, and some people lost a lot from it. So if you come back to the news itself, JP Morgan, they mentioned that the glove sector lacks visibility, which to a certain degree I agree, because the ASP to date, based on channel check with some of the friends that are in the industry, they're not manufacturer themselves, but they are the trader. They sell to Saudi Arabia. So ASP itself really hasn't recovered back to the pre-COVID era. So there are some one of the top 4 glove maker in Malaysia. Sadly, their utilization rate is around 30 to 40 at the moment. So imagine back in COVID times, they are 90, and some even claims that they have 120% utilization rate. Now it's 30-40%. When you're underutilized again, remember what we mentioned at the very beginning of the session, we talk about depreciation, we talk about fixed costs, and we talk about your capital commitment into expanding your your production capabilities. So when you are underutilized and the SP has been depressed, so naturally this will be a midterm negative news to the glove sector itself. But having said that, if you look at the share performance of the glove sector, okay, after the JP Morgan so-called prediction and also comment on the lackluster in terms of earnings visibility, you can see that the share price actually still remains elevated on year-to-date basis, even in 6 months basis. So what does that mean? In this case, this is kind of a rare case. The drop in terms of glove prices has been quite drastic. I think this one is a common knowledge to everyone. So a lot of this kind of bad news and also negative news has been sunk into the share price of the company. Effectively, the share price has been depreciated off the negative impact. So in this scenario, so if you see, I'm not saying that it's a good chance to go into glove sector, but for other industry that you see the same thing happen when negative news come out, whether it's short term or mid-term or long term, when it doesn't further dampen the industry share price, that means that the selling or the pessimism is going away or is going at a very minimal level. There could be a tipping point where once a very minor good news coming back, it will spark the investor interest again. That is for trade, more towards trading opportunity actually. For longer term investors, you might have to wait for a confirmation signal in terms of their earnings, or there's a consolidation in glove industry case. You start to see consolidation of the industry itself, like back in 1990s. A lot of the smaller, they have to sell the factories to the bigger players, or they have to close it down and sell the machineries. Until that happened, I think the ASP, especially the competition coming from China's side, it will still be quite competitive in this sense. Okay, so this is one of the case study and also personal experience that I have for you guys. Okay, and then for this one, I believe this one is one of the most straightforward. Apologies for the Mandarin wording over here. It means that ringgit against US dollar had gone up, but this is a news back in April 13. So it's quite straightforward. For this kind of news, you can immediately figure out the company that you invest in. What is the exposure in terms of US dollar against ringgit? So when it goes up, what will be the translation into the EPS in their upcoming quarters, and is it sustainable? So normally US dollar to ringgit, their share price wouldn't move immediately until they hit a certain point. For example, back in when US dollar to ringgit, before they hit the $4 mark, the furniture industry, I think, still haven't followed up back in the time. But once it passed that mark, immediately the whole industry, they will follow. Export base, everyone is going towards them. So these are the trading opportunities that you could leverage based on the news that you gather from the market itself, right? Okay, so I think this is really important to emphasize and mention it again. Always think at least 2 layers. That means that this is on the surface, the impact on the surface. What would be the chain effect of this news towards the companies in the value chain or towards the company itself over a longer term period? So and also you always have to think about, had this factor into the share price itself. I think with a lot of tools now, for example, TradingView or maybe your broker app, you can immediately check on the share price, share performance itself. Had this factor into share price. So is there any further surprise element that could move the share price up or down? Ultimately, for me, the factor that would drastically move a share price is always the surprise element. When people have expectation, normally the share price movement, it will be not that drastic, but on a very big surprise, will be it positive or negative, it will really move the share price. So you can consider that and always keep that in mind to figure out whether there are any surprise element along the way. Okay, so maybe later on I'll first address the questions that we have in the chat box, and if you guys are good, then perhaps me and Shane, we can discuss a bit about the hot news that are happening in the market now, so that we can have a couple of more live examples. But we still have a bit of time. Let me share with you a bit about the forward PE calculation that I just mentioned just now on the news-driven EPS changes. Okay, so let's go back to square one, where news itself, it will impact the EPS of a company, earnings per share of a company, over a short or longer time frame, be it positive or negative. So let me give you an example of a positive longer term EPS translation. For example, for construction companies, normally if you look at Bursa announcement, their contract terms, they would normally announce a couple of things. One, commencement date of the contract. What does the contract includes? What are they building? And the contract value, and over how many months. So you can always refer to whether their annual report, their quarterly report, analyst report, to refer their latest order book value. Then you can add on the contract value to their order book. Then you can get a new total order book value of the company, and you can divide the total order book of the company by weighted average period. Okay, for example, like let's not complicate it too much. Let's stick the new contract, for example, 500 million contract over a span of let's say 5 years. So every year the contract is expected to bring in 100 million revenue to the company. Now, normally construction company, their margin would be single low digit, where it's between 3 to 5%. So you can take their 5-year past average profit after tax margin to calculate the earnings that they will get from this contract per year basis. Now, of course, construction, their accounting methods are quite complex. It involves progressive billing, and also they have to verify their work done, and there's the involvement of contract asset, contract liabilities, etc. But you can roughly get an idea whether this contract will contribute how much to the EPS of the company. Then you can forward the PE valuation of the company to justify whether the valuation of the company currently is making sense or not. Okay, so another example I think would be semiconductor companies. Normally, analysts report, if the semiconductor company have, they would provide you the order book value, latest order book value, and as well as a book-to-bill ratio. Basically, book-to-bill ratio is, I would say, an indication of how busy the company is. Anything above 1, 1.1, 1.2, for now, this kind of period, I think is super rare. But if you find any companies that have the book-to-bill ratio of 1.2 and above, that means that they're super busy. And you can look at their order book value. How long will they burn the contract that they have, or the order book that they have, to factor it into their earnings. For example, for a semiconductor company, they have a 150 million order book, okay, that will last for a span of 1 year. So know that the basic revenue that this semiconductor will get for this financial year will be 150 million. That is the minimum the company will achieve for this year. If there were no delay in terms of order delivery, there were no order cancellation, okay, on that basis. So it gives you an indication of what will be the future earnings of the semiconductor company. And again, you can use the 5-year average profit margin, or if the profit margin increased drastically over now and you think it's sustainable, you can always use the latest profit after tax margin to calculate the EPS of the company, reverse it, and you can calculate the forward PE of the said company. Okay. Normally I would use forward PE to calculate this kind of companies. to justify whether the valuation makes sense now, or is it not making sense at all. It's a pure speculation, and also it is more towards a short-term positive news that it is hard for us to invest in it or leverage on the opportunity itself. Okay, so I think that's all for my sharing part. If you have any questions, we have reached the Q&A session. I'll pass the mic back to Shane to host the Q&A session. So hopefully it helps, and I'm happy to address the questions that you guys have.
Thank you so much, Max, for doing this session for us. I'm sure all of us here have learned how to analyze news better by now. So if any questions to ask our speaker today, Max, you may write your questions at the Q&A box. Don't write them in the chat box, okay? Write them in the Q&A box. Any questions so far? Okay, looks like Max have done a good job. Now, the first question by John is that sometimes a company declare very good quarter results, but the share price drop. Why is this so?
Okay, I think that's an excellent question, John. Normally, when you see that the company have very good quarter result, I think there are a couple of reasons. The first one being there is an involvement of a one-off basis item in the quarter result. That is why that people, they're not buying it because they know that this will last for one quarter only because due to one-off effect. But I think you're referring to the company itself is doing really well in terms of their quarter result. So normally this is because that the expectation has already been there. Like I mentioned several times, you have to always look at the share price, whether this had already factored into the share price itself already or not. In your case, it is most likely that the market already expected this company will perform really, really well. If you look back into the valuation of the company before the announcement of the quarterly result, I believe you can find that the price or valuation of the company had already went up 1 month or maybe a couple of weeks before the announcement. So there is an expectation over there. Unless the company meets the expectation or exceeds the expectation, normally the share price will drop based on profit-taking activities. So that typically happen in Malaysia, and then in US market, normally they will base that on analysts, expectation in terms of their EPS. So I hope that addressed your, question.
All right, thank you so much, Max. The next question is by Ging Heng. There are a lot of people who are so-called insiders. Do you think their news are reliable? Okay,
Ging Heng, I'm not sure who are you referring to that they would call themselves insider, because it's a obviously it's a criminal offense, so it'd be quite funny to they call themselves insider. So but if this person is related to you somehow, I think the best way to gauge this he or she is to have a track record of his or her news previously, see whether it's accurate or not. If it's really accurate, then maybe this individual really has a really good connection to the industry people, or they, like what I mentioned just now, it might have a very good business sense or have very good exposure towards the industry itself. For example, like he have friends in oil and gas industry, so that I heard this company might get awarded a contract by Shell, etc. Blah blah blah. Or maybe it's in the palm oil industry. Before the palm oil price went up, they already know, hey, there's a severe shortage in Sabah Sarawak region, that insufficient supply labor. So a lot of this FFB fresh fruit branch brought onto the floor, rotten, no one can harvest. There should be a shortage of FFB translate into CPO in the future. So if these are the kinds of so-called insider, then probably you can test them, check on their track record. So I couldn't give you a right answer, whether their news are reliable based on this.
All right, thank you so much, Max. The next question is by Yok Long. 90% of the news are past information that are normally useless to investors. So how do we identify future news, okay, that will bring benefit to the company?
Okay, I think you're right in the sense that information that went public, normally they already factor into a share price, like I mentioned just now. Perhaps they already, one, they get a hold of the information beforehand, or maybe two, they have already, in the morning, maybe their hands are quicker, so, or they know how to queue their order. You know, there's actually a technique for you to queue your order to bypass other people's order, not bypass, sorry, to actually buy the share first before others in the morning in the pre-opening period. But that one is a bit technical. I think you can ask your, you know, dealer rep or remisier on that. Not to say bypass, I would say the correct way to, you know, queue quicker, okay, for that period. Because if you queue overnight, normally that order will get rejected or something. But back to your question, how do you identify future news that will bring benefit to the company? I would say that talk to industry people. That's always the best choice that you can have. If you have friends in oil and gas, always, you know, keep a, of course, I don't just keep a good friendship with them just because you want information, but keep them close. So as and when you can always follow up, hey, I heard that, you know, the oil price is gonna go up further. How are things in your company? Are you guys busy now? Are you guys seeking any greenfield or maybe any brownfield projects coming up? So, you know, any information that you can share with me, because I have this oil company, do you know how they are doing? Because sometimes on industry people, right, they will know the quality of work these companies delivered. So essentially they know whether these companies, they are genuine or they are just playing around. Industry people would know. So I think to answer your question, future news, quote unquote, future news, it's best to talk to industry people.
I would agree with you. Great answer. The next question is by Elaine. Would you elaborate on the impact of the ESOS on share price, and how do we get the information on the exercise of the ESOS?
Okay, I think to me, ESOS itself, it depends on whether the company itself is growing or not. Of course, ESOS, employee share option scheme, it would dilute your shareholding naturally. And to answer your question first, you can get the information of exercise of ESOS on Bursa announcement. And normally the exercise of ESOS is because an employee or the staff of a company, they wanted to, you know, get the share of the company because of they believe in the company, for example, or it's because they want to take profit. It could be a lot of personal reasons involved. But impact of ESOS on share price, if it goes on for too long or too much of a ESOS, it will cause a negative impression to the company itself, and the share price will drop because people got fed up. A lot of me, myself included, a lot of retail investors, we got fed up with always there's a conversion of ESOS, always diluting. But ESOS itself, in terms of cash retention, also cash flow of the company, it is quite a good way to retain talent, especially if you look at the semiconductor industry. Now, I think it kind of slowed down for a bit in terms of we call fighting over for talent. Back in 2021, there's a severe shortage in terms of engineer that the MNCs over in Penang, they would offer up to double the salary. And they have international exposure that would be looking really good for your resume. So at that point of time, one of the way that you can choose to retain your talent, such as engineer for semiconductor companies, it would be giving them ESOS or maybe SGS share grant scheme. So net, it depends on the growth of the company, whether it's really growing to justify the effect of ESOS. If you see a company keep doing ESOS, but the earnings and also revenue, they are not growing by any means. So maybe there's other agenda behind, because ESOS normally are done in a discount. So be really careful on that. Yeah.
All right, just learn that I'm mute and on mute. So the next question is by Wing On. Why is there many listed company do not reveal the actual reason for the resignation of a CEO or key management staff? They only give a brief or a general reason?
Okay, so I really wish that I could give you a holistic answer to that, but normally it's to protect both parties, I would say. So imagine you are in the position of the listed company. Your CEO or your key management would want to resign from the company. Takan, you mentioned that, oh, the company treat me badly. There's only one case that I saw there is a genuine confession in terms of why they do not want to be in the board of director, which is Revenue, the Ng brothers. They just mentioned that, okay, I just don't want to deal with this board of director. That's the only case I've seen in recent years that they give a genuine answer. So when it goes to listed level, right, the management itself and also the company itself, you have to take care of their reputation. Imagine if a CEO itself, it gives a very drastic reason for resignation. So imagine when it goes to the next company, what would the next company think of him, and what will be the impact onto the listed company itself? So unfortunately, this is something that it's really hard for us to change. But in the short-term period, if in the span of 2 years, there's a same position, a change of more than 2 times, be really careful. There must be something wrong with it. Definitely something wrong when the same position in the span of 2 years, or maybe some other drastic cases in 1 year, double resignation. So you must be really, really, really careful with it. There must be something wrong. And also one of the case, I would like to elaborate a bit on the resignation. Resignation of auditor is actually red flag unless it's after 5 years, which is a corporate governance kind of thing. You have to get a new auditor every 5 years. It's not a must, but it's a good corporate governance. But if you see out of the blue, before the AGM or you heard of that company has some bad things about the company, and then suddenly a auditor resigned, then be really careful about that.
All right, thanks Max for sharing with us one of the tips, okay, to identify any major reflex in the change in the management. The next question is there a timeline that publicly listed company need to inform the shareholders of a significant material news? As always, they inform shareholders quite late or until Bursa query them.
Okay, actually, there is a timeline, but I think that is the expertise of a company secretary and also share registrar. I'm not really sure on the exact date that the company need to inform, but I believe it would be not more than 7 working days. That's my personal presumption. If there's any professional company secretary or share registrar here, you could ask them. Yes, there's definitely a timeline, and they would be penalized if they cannot, if they fail to disclose to inform the shareholders. And to elaborate a bit on, I saw another participant's announcement. Substantial shareholder buying and selling, yes, it must be announced no matter what. It must be announced, but the timeline, I'll suggest that you can check with the share registrar or the company secretary itself. Some good practice they would announce on, if you look at the announcement that they have made, within 3 working days they would announce it. And some they might drag a bit longer, especially with festive holiday. Then Saturday and Sunday, you will see that the impact is longer. So I understand where you're coming from. You're trying to understand that the substantial shareholder or the key person selling, there must be a reason behind it, and you want to act in tandem with them together. I understand that point of view. But unfortunately, there are no practice as such as they have to announce on the same day, so far as I'm concerned. So yeah, I couldn't answer you. Apologies, couldn't answer you on the exact timeline, but I don't think typically it's three working days from what I see now.
Okay, so after for example, they buy the share on Monday, the deadline is to file it to the exchange by Thursday.
Not deadline per se, but the common practice would be on Wednesday or Thursday, you will see the announcement coming out. Yeah, common practice.
The next question is by Marin. Changing in substantial shareholders, is it considered as short-term news or long-term news?
Okay. You have to see, like, who is the said substantial shareholder. For example, like major institutional fund like EPF, when there's a buying or selling, of course, buying should be a positive impact, right? Because they wouldn't really buy into a company up to 5% if they do not think the company is good. And obviously, when they're selling below the substantial shareholder benchmark, which is 5%, there is some rationale to it. Okay. So for substantial shareholder, I want to emphasize that the benchmark is 5%. So normally I would not take institutional fund into the factor too much. The reason being they always have their own mandate for one. They always have to rebalance their portfolio. So it could be not fundamentally changed, not because of fundamental changes in terms of the company that caused the buy and sell changes in terms of shareholder, but it's due to their mandate and also due to their rebalancing and also restructuring, etc. So there are other external reasons that would cause that. Okay, but if you see the founding member or the key person of a company is selling, okay, if he or she is selling like 50,000 share, 100,000 share, and it could be really due to personal reasons. You need to cash out, especially they are not the major one. But if a major shareholder, after a period of time, you see them selling a major stake in the open market, especially normally the Bursa announcement, they will tell you where they sell, whether it's a DBT transaction, direct business transaction, which is off market, or it's a on market transaction, open market transaction. If it's open market transaction, first thing, the share price will drop drastically. Secondly, unless they have no other choice, normally they would not sell in open market. So it'll be a very, very, very bad news for me if I see a founder of a company to sell it at open market. Whether it's margin call or not margin call, it's still a bad sign for me. It's typically a bad signal for me. There's no reason for him or her to, sell the shares in open market and have to make the announcement to tell the whole world that, oh, I'm selling my shares in the open market because of blah, blah, blah reason. So anyway, it doesn't look good. It should be a mid to longer term negative impact, because shorter term, it wouldn't trigger them to, dispose of the share. Normally founder, they have a longer vision towards the company itself.
So if a founder wants to sell the shares off the market, which is DBT way, does it need to announce it to Bursa who is the intended party who buy, how many lots they buy, and what price they buy?
No, unless it exceeds the 5% mark.
Okay, so if you sell less than 5% of the stakes through DBT, he doesn't have to make public who is the other buyer.
Yeah, but there's other way that they can, for example, I have two accounts, me and my spouse, for example. It will be the kin. Maybe, okay, it will be gray area. For example, me and you, we each take 2.5% and 2.5%. So it's effectively that's 5% gone from the founder. But me and you, we are not directly related, blood related. So there's no announcement need to be made. But obviously, when you go into the annual report, 2.5% can be seen. So if you see an announcement of the founder selling a lot of shares, there's a good chance that you can see who will be the person that uptake the shares in the coming annual report.
All right. Recently, the recent news that the government announced on the NIISE Immigration Department, and Iris Corp is down 13% amid talks of the NIISE cancellation. And actively traded MyEG rises 5.4%. So will the government change its mind?
Okay, I think this is a $1 million question that I also wish to know, will the government change its mind? But I cannot comment because I'm not a licensed person, so I cannot comment on individual stock too much on itself. So what I can give you a alternative answer, okay, is that you can actually look at the fundamentals of Iris itself and also MyEG. For example, in this case, or maybe in other cases where two companies are fighting towards the same contract itself, okay? look at the fundamentals of these two companies, see what will be the effect, add-on effect, or maybe the if there's a loss of contract from this company, had the share price factor in already, and is it really that substantial that it would really pull away the long-term revenue stream from that company itself? If it's a yes, then there's a very significant political risk involved in the company itself. But if you are buying after the company that may, I would emphasize may get the contract itself, you are effectively betting on it because there will be no concrete answer whether it can be done or it cannot be done. So you have to really be careful when you buy into this kind of companies. Normally, I personally, I won't do this kind of transaction or trading or investment unless the share price of the company that could be benefited lays very low or had been flat for a long period of time. That means that there is no additional premium being added to the company at the moment. If there is a news or even just rumor, the share price itself will normally go up. So there's a arbitrage opportunity. Sorry, not really arbitrage opportunity. A leverage opportunity for me to, based on that transaction itself. Otherwise, I think I would refrain from doing this kind of transaction. But again, I apologize for not having the crystal ball to answer that question itself. But I think coming from investor perspective, you can dive down into the two companies to really understand whether okay, two ways. You can go to the fundamental perspective, whether if a loss of contract, what would be the impact, and also the financial impact if they get the said contract, and also check on the shareholders or maybe the key management of key board of director of the company, and try to Google them, and you might or might not able to see some political connection in between. So you relate back to the current cabinet. So maybe you might be able to find something there. So this is one of the way that you can, drill down to the speculation itself. But normally political terms, I wouldn't really, go and touch. So that's my comment. Sorry, couldn't give you a more clear answer.
I think it's time to talk to the industry people to get future news, right? Like what you just answered.
Political people and industry people, yeah.
All right. Now, every day there are companies making a big progress, and there are a lot of news passing by. So what kind of news does the listed company need to inform the exchange, and what kind of news they don't have to make a material announcement?
I think that's a material benchmark that if anything hits this one, I think you need to check with the company secretary and share rec of the company. I think if it hits a threshold of 10% impact revenue of your company, you need to make an announcement. And for example, like RPT, related party transaction, no matter the amount, I think if it's substantial amount, that's a benchmark also. You have to make an announcement. Otherwise, you have to share in annual report or quarterly report. And for contract awarded itself, I think that's a 10% benchmark. And if you were to divest into a new business that would exceed 25% of your revenue or net asset, that's a hard requirement that you have to make an EGM. Again, this you have to check with the company secretary. But if I'm not mistaken, you have to call for an EGM to get approved on the additional divestment into the new industry itself, going through the EGM. So it depends on the nature of the announcement itself. Like MOU, there's no hard guideline on you have to announce MOU unless it will be material. But of course, if you don't announce and your share price move, you get query. But if you doesn't announce, only you show in your Facebook page and etc., your share price doesn't move. So I think it's about good governance and also good practice of a company to ultimately announce it or not for non-material items.
Yeah, I think the last I heard from a listed company CEO is that 5%. If
5%,
yeah, it's more than 5% that will impact your revenue, they have made an announcement. But of course, check with the company secretary.
Yeah, that'll be the best. Could check with the company secretary, but or you can actually go to the AGM season is coming up. So if you guys are really interested in this topic particularly, you can always raise the question in the AGM or EGM itself in the coming month. I think coming month, a lot of AGM is coming up.
Yep. All right. I think we have reached the end of a question and answer session. Looks like time has run out. So we want to thank Max Tan for doing this segment for us. Hope that all of you here have learned a lot from Max today about how do you read news and how do you position yourself, whether is it in trading or is it in investing, to take advantage of the news movement. All right. Thanks, Max.
Right. Thank you, Shane. And thank you everyone who attended. I wish you have a smooth trading and investment journey ahead. See you guys soon.